Return of income. Section 139. Mandatory return. First, company. All any type profitable or loss also include. Section 8. Company. Second, firm also includes LLP. Then third, every person before claiming deduction under Chapter 6A and exemption under Section 54 and 54B, D, G, GA, GB, EC exceeding basic exemption limit except 54 EC is not covered. 54 EE is not covered. Then fourth, ROR having assets including financial assets or signing authority outside India as beneficial owner or beneficially. Proviso has been added in Finance Act regard following person to file return of income. A. Any person who has deposited in aggregate rupees 1 crore or above in one or more current account. B. Has income and expenditure for foreign travel for himself or for other exceeding 2 lakh rupees. And C. Has incurred any amount in aggregate of rupees 1 lakh towards consumption of electricity. Then return should be filed in prescribed form within prescribed time. Section 139(1) Due dates of filing ROI. Then company liable to TP pricing under Section 92E. Then 30th November of assessment year. And company may in others 30th September of assessment year. And others asla. Then liable to tax audit under Section 44AB. Then due date is 30th September of assessment year. And not liable to tax audit. Then due date is 31st July of assessment year. Section 139AA Aadhaar. Say Aadhaar with effect from 1st July 2017. Every person who is applying for PAN or filing return of income must have Aadhaar number. If Aadhaar is not available, then provide enrollment number. If Aadhaar is not intimated to appropriate office, PAN shall be deemed to be inoperative and penalty for non-compliance will be levied. Following person is not required to hold Aadhaar number. First, non-resident, then non-citizen of India, person age 80 or above, and person residing in Assam, Meghalaya, and Jammu and Kashmir. Section 139(3) Loss return. If assessee wish to carry forward the loss, he must file loss return within time limit under Section 139(1). If loss return is not filed, loss cannot be carried forward. Two loss can be carried forward even if loss return is not filed on time. First, HP loss and unabsorbed depreciation. Section 139A PAN Permanent Account Number. PAN is mandatory for income exceed basic exemption limit. Second, business or profession where gross receipts or sales exceed 5 lakh rupees. And third, every person other than individual if the financial transaction is aggregate exceed 2,50,000 rupees in previous year. Every person taking position of director, CEO, partner, trustee, principal officer, founder or other office bearer, each person taking position of then PAN is mandatory. Then fifth, any other person prescribed must hold PAN. And if a person do not hold PAN or Aadhaar, then or quote wrong PAN, then under Section 272B, penalty is rupees 10,000 rupees. Time limit to acquire PAN. First, if income exceeds the basic exemption limit, then before 31st May of assessment year. And if business or professional income exceed 5 lakh, then before end of previous year. And third, whose financial transaction exceed 2.5 lakh, then before 31st May of assessment year. And fourth, person holding specific position, then before 31st May of assessment year. Section 139 subsection 4 belated return. If assessee fails to file ROI within prescribed time under Section 139, he can still file return A by the end of assessment year or before completion of assessment year, whichever is earlier. And if financial year is 2019 and 20, then due dates. Section 139(1) due date is 31st July 2020, or if audit, then 30th September 2020. Then belated return. Section 139(4) due date is 31st March 2021. Consequences of not filing ROI on time. First, penalty under Section 271F rupees 5,000 and fees under Section 234F and interest under Section 234A at the rate 1% or part thereof. And BGA बजा देगा means BGA under Section 144 best judgment of assessment. And fifth, prosecution after such under section 132. Section 234F, fees. If assessee do not file ROI within time limit under section 139(1), fees shall be as under. If filed up to 31st December, then rupees 5,000, or beyond 31st December, then fees is rupees 10,000, and if income does not exceed rupees 5 lakh, then fees is rupees 1,000 only. Section 234A, interest for non-filing or late filing of ROI. If ROI not filed, then interest at the rate 1% per month or part thereof shall be applicable on tax payable. Interest under section 234A is mandatory interest. Section 139(1)(c), exemption from filing ROI. CG means central government may notify class or classes of person who shall not be required to file ROI. Section 139(1)(c), following class of person from filing ROI. First, non-resident and foreign company. Means then, any income chargeable under Act in previous year from any investment in investment fund set up IFC located in India. Conditions of exemptions. For our exemptions, first, TDS has been deducted at applicable rate under section 194 LBB, and there is no other liable to tax liability. Section 139, subsection 5, revised return. If assessee finds error or omission in return under section 139(1) or 139(4), he can file revised return then by the end of assessment year or before completion of assessment year, whichever is earlier. Note: revised return can be filed any number of files without any limit. Then second, revised return will show steps on original return. Hence, only revised return will be considered for the purpose of assessment. Section 139(1)(a), bulk return. This scheme of ROI filing is optional. Details of income shall be submitted by employee to employer, who shall furnish ROI on behalf of employee in CD, pen drive, or other computer readable format. Return file shall be deemed to be filed by employee. Section 139, subsection 9, defective ROI. If AO finds defect in ROI file, he shall communicate this defect to assessee by issuing notice. Assessee will be allowed to rectify the defect in 15 days. If rectified, then ROI shall be valid, and defect is not rectified, then ROI is not valid or invalid. If return becomes invalid, all consequences of not filing return shall be applicable. Section 140A, self-assessment tax. Assessee shall pay self-assessment tax along with interest and fees before filing ROI. If assessment is made, the adjustment shall be in the following way. First, adjust fees, then second, adjust interest, and third is adjust the tax.
Please like, share and comments and press the bell icon and subscribe our channel for latest updates, and join our Telegram channel for all notes. Channel name: C Inter Handwritten Notes. Thank you.